Hello and welcome everyone to today's session, Deep Dive with the Markets, Deep Dive Inside the Markets with Mohammed Shanti. I'm a financial market analyst at FX Pesa and EGM Securities, and I will be today your host. Please be aware that every information that we give you are just for insights and for your benefit. Please don't use it as a recommendation or anything like that. So starting with this session, I will be talking about what's going on in the market today. So many things happened just from past week till today. And as we mentioned last week in our session, we've mentioned the threats and the tensions between the Ukraine and Russia on the markets. And especially since the escalation has even rose further, you could see prices are moving in a really high volatility, high momentums, especially from oil, gold, euro dollar, even indices. There were talks to settle things around, but nothing really happened. And we will start today with our fundamental and technical for the oil. Then we will go for gold and then the indices, the Dow Jones Index, and also then finishing with the currencies, the euro, pound, and the US dollar. Starting with oil, the commodities has already surged across the globe. Starting with oil, the prices of oil reached the highs of 2008 and currently standing at the 125.20. The surge in prices came after the escalation have risen, and also Putin did mention that there were sanctions coming from the US and the UK, which actually affected the markets, and these the Russian president actually retaliated, saying that these sanctions, if were to be implemented, it's a declaration on war on Russia. This has actually affected the sentiment, and there was a huge surge in prices. Now, the fighting in Ukraine is intensifying, and a third round of talks between Russia and Ukraine officials has not led to any much progress. So risky assets are seeing a type of rebound a little bit. So a little bit in the European session. However, during the US session, we saw a huge volatility, especially on gold prices and oil. Oil technically was able to defeat this gap that happened during Monday after the tension escalated on Sunday, and we saw a huge gap to the upside. We saw prices all the way to reach the 124, and now it came back again. Now, currently, we said last time that prices, if they were able to defeat the 100 mark, which was a really important resistance level, we could see prices all the way up higher and higher. Now, the next levels were the 113, and now it's rising to the 124. This levels we didn't see it before. We saw it at 2018, and the next levels for the bullish traders could be the all-time highs of 146. Now, what should the traders do as in their strategy from a technical perspective? Now, if you want to trade in the long-term view, trading for, like, let's say $20, aiming for the $20 of 146 could give you benefits, but you're currently at the levels of at really high levels. So a bearish momentum to the downside, a small bearish momentum, could actually set triggers for buyers to enter from here and aim higher for the 146. Now, since we don't have any clear resistance on the 4-hour chart, basically we can use Fibonacci ratio to calculate where is my next target. So whatever you're going to use, wherever your entry is, always multiply that entry, okay, by the difference with your stop loss. So let's assume if we have a stop loss here around the 114 and my entry around this area, 123, let's say. So the difference is $10. Since there is a $10 gap, I just multiply that difference with, let's say, 1.618. So basically this chart over here, if you look at the chart over here at the shapes, you can take this area as your risk. That's for the bullish traders. Where do I aim? I don't aim for the double. I wouldn't aim for the double as my main take profit, no, but rather a little bit smaller, like not to this area above. So this is a 1-to-2 ratio. So here is my take profit, the main take profit, which is 135, if I'm taking 1-to-2 ratio, but rather I would take even a little bit lower. Why is that? Because the main reason I would go to this level first, which is 132, is first, you could see prices all the way higher, but it could retrace. Now, this small retracement happening, it's not your exit point, but rather where you should move your stop loss, that if this price were reached, you move your stop loss to entry, which is a good scenario for bullish traders. Now, since as you're entering at the middle of, let's say at the middle of a potential trend to the 146, you would know exactly when to exit if prices didn't reach the 146, which could be here or even here. So at 130 or at 132. Now from the downside, if you look at it from the downside, you could go, if prices were able to retrace back to the moving average, of 108, okay, you should wait for a confirmation. Confirmation from who? From the stochastic and the MACD. Now, the stochastic is currently at the overbought territory. However, there are no signs of letting this down. So we could wait for a small retracement happening in the stochastic, similar to the prices. However, if prices reach the 50 mark, which could indicate the bears are in control a little bit, I would wait for a breach of this level first. So a confirmation from the stochastic, and then aim to where? The risk here is to the second moving average, which is 98 mark, because you could see prices do a wick to the downside just below the 100 and then retrace back. So that's a risk. If you want to take it, it's up to you, the trader, but still the bullish momentum is in control, which is confirmed by who? The MACD. And as you can see, there is one crossover to the upside and another one coming to the upside just above the 0 mark. And you can see there is a huge control of bulls at the moment. Now, as I mentioned, a small retracement and then continuation to the upside could happen. Other commodities also surge. If you think of Russia, like Russia is how can I say this? Russia is one of the biggest suppliers of commodities around the world. Okay, and that means you could see prices of wheat, even nickel, going higher and higher. So you can use oil prices as an indicator for you. If prices retraced a little bit and then went higher, you can use that as an entry in the wheat if you are not familiar with the technical setup for wheat, for instance, or corn, or even any other commodities. Now, going to gold, another commodity which is a lot of traders love, a lot of traders even use that for hedging purposes. The current tensions have pushed the commodities also higher, especially gold. And you can see prices are currently on the 4-hour chart near the 2065 mark, near all-time high, which is 2075, 2074. A breach of this level, we could see prices go higher. Now, how did this happen? So due to the tensions, the US and the UK governments already announced bans, short-term bans on the Russian supplies. Now, this could actually affect what? A small recession or a global recession. This recession put fear on the expectation of a global recession or indications of a global recessions. It's always bad for bullish traders, for bearish traders, especially on gold, because they would know that there could be fear indication, and whenever there's fear, people tend to go to gold or to the US dollar or even to the franc or the yen. But gold is one of the safe haven items that people use to hedge against inflation, hedge against global recessions or fears of a global recession and so on. So even though the US dollar today rose, okay, but still gold is being demanded higher and higher. So heightened fears about a global recession has boosted the precious metal. And as you can see, prices are currently above moving averages. From a technical perspective, already defeated the 1975 mark, and now going all the way higher above the 2000 mark and to the 2064. What's the next level for buyers, which is the 2074, which is the main aim for buyers to defeat. If they were able to defeat that, there are no resistance available for any trader to reach at. So basically what you need to do, every time prices go as much as $15 or even $10, you move your stop loss higher and you do a trailing stop loss if you're taking a trade from this area. Now, what's going to happen in the short-term view? If you look at the short-term view, still there is a bullish setup, completely bullish setup compared by the MACD and the stochastic. Now, the only way for prices to end this bearish, this bullish setup, we need a defeat of this level. A defeat of the 2000 and 1995 is required to see an end of this bullish momentum. You could see prices retrace, and then range, but the bullish momentum continue, especially if this price is defeated, which is a previous resistance and a psychological level. So if prices were defeated, expect prices to reach the 1995. A confirmation would be if there is a stability beyond this level. Now, if there was a stability beyond this level, expect prices to go all the way lower to 1965 and then next to the 1970, which are the moving averages. But other than that, we could see a continuation to the upside or even stability near these levels. However, a test of this level is expected. Now, going for indices, if you look at the indices in general, today there is a bullish momentum happening, very short-term bullish momentum. However, we saw a small wick to the downside. This is on the daily chart. Now, this is a really huge for traders who especially are scalping or not. So if you look at it at the 4-hour chart, oh, sorry about this. Let me fix this for you so you can see the main fundamentals here. Now, US equities remain a fragile state of fundamental variables as the risk sentiment has been hit because of the tensions. Now, as you can see, there is lower lows, as we mentioned in our previous session, and we said if prices continue to stay above the 33,500 mark, stay below this mark or below the 33,800, we could expect continuation to the downside, and this is what happened. However, the continuation to the upside could be seen, especially there is a small bullish momentum here. We could expect traders to take a trade from here and aim for where? To the 32,237. This is, I know this is a very long-term view, but still, if you go to the 1-hour chart, even the 1-hour chart says that there is a short-term a bearish momentum. Now, where should I aim at? Now, if prices were able to defeat the 33,500 mark, we could see prices all the way back to the moving average, which is the pivotal dynamic moving average for traders. Above this level, there could be a huge test for the 34,182 mark. A defeat of this level, and this would be a confirmation for traders that the downtrend has finished completely, and we could see prices continue to the upside even to the 35 mark. Now, fundamentally, there is a fundamental variables actually supporting this view? It was, or we saw that during Friday's non-farm payroll. However, the non-farm payroll, even though it came way better than expected, almost 300 more or added jobs to the US market, but still, because of the tensions or because of the geopolitical tension, we're seeing prices actually not affected by the macroeconomic events. Even though we saw a small movement, but not compared to the tension. The tension is the one that is controlling the markets today. And it could actually continue, especially if the escalation increase or even the tension increased between Russia and even the United States and the UK, if they continued to impose the bans. Now, imposing the bans on supplies of or the, let's say, the oil imports of Russia indicates of what? Lower supply and higher demand. This could indicate a high, like prices of oil could reach, as the Russian minister mentioned, $300. What that could happen to the US indices? To the US indices, that's very risky to them, because this would actually give a bearish signal for traders to go short on the short-term view and even on the long-term view. Now, as you can see, prices are testing this area. A defeat of this area could be confirmed by the stochastic. As you can see, there's still not an overbought territory. That means we could see prices higher in the 1 hour frame. However, expect prices to continue maximum to this area. We could see ranging, and then from there we could tell if prices gonna go down or to the upside. If prices defeated this level, we could expect prices to go for 400 points more. If it didn't, we could expect prices to go all the way to this recent low. However, the main aim for bearish traders is the 32,237 mark. Going for the euro dollar. Now, a lot of traders use the dollar as their let's say trigger for trades, especially the dollar is dominating the market in general. And people love to watch out for the US dollar news and so on. Now, the latest movement of US dollar is completely bullish because there is a demand on the safe haven in general. Now, as you can see, there is a huge downside trend going all the way to the marks of to the one spot of 0813. However, we're seeing a small retracement to the upside. Now, this small retracement could be a trigger, could be a small trigger for who? For sellers to re-enter the market. How can I be confirmed? We need a small cross to the downside by the MAC. Now, there is a bullish crossover, which indicate an end, almost an end for this downtrend. However, if prices continued higher and then went down, you could see the MACD confirm a bearish signal, which could indicate prices could go below this mark. Now, a defeat of this mark is required because it's a huge support level. From the top side, if prices reach the one spot 1046, this could mean an end for this downtrend, but still we need the buyers to push it all the way here. Now, is there any fundamentals actually supporting the euro currently? No. Why? Because the tensions is actually escalating, and basically traders are going for the US dollar. Whenever the US dollar is going higher, you could see the euro dollar goes down. Now, also, since the war is actually in Europe, the most damaged the most damaged country are Ukraine, of course. However, it's actually affecting the pound and also affecting all European currencies except for the franc, because the franc is considered as a safe haven. However, you can see there is a small retracement at the moment. Small, that means the current downtrend has almost lost momentum, but still doesn't mean there is going to be a bullish setup. It means that there could be a small reversal to the upside, but not that much. That's why we need to be careful here trading the euro dollar, especially there is a huge demand on dollar. Also, if you look at the US Treasury yield, there is a sharp increase today in today's session, and for the Treasury yields, you could tell that the current increase of almost 16% on a daily basis, and it currently stands at the 1.85%, which is currently huge, and this rise actually boosted the US dollar. So we could see prices reach for the stochastic, we could see prices reach the overbought, and then it could actually trigger sellers to continue the downtrend. From the pound side, you could see prices are currently standing at the one spot 31.22. Now, the downtrend, we've mentioned last time, the downtrend started happening here, and we said prices should defeat this area, this crucial support area of 1.3034, and then this is from last week, which we said that the prices already defeated that level, and we said that if prices actually retraced and continued to the downside, we could see a continuation for the pound yen to the levels of 1.32 and then to the 1.3150 mark, and we are seeing that happened. And currently prices are standing below moving averages, and there is a bearish signal at the moment to the downside from the stochastic, and a bullish setup, currently a bullish setup in the MACD, but still below the negative territory, which indicates that still the bears are in control. As long as prices stand below the 1.3160, the downtrend could continue. Now, if prices retraced back higher to the levels of 1.3255, we could see a small ranging market, and from there we could tell if prices could continue to the downside or retrace back even further to the levels of 1.3392. Now, if bulls were able to take control and defeated this level, expect prices to go back to this support level, which is 1.3480. Now, this is in the long term, a little bit long term. If you go as low as the 15-minute mark, trading above this moving average is required to enter the market for a bullish setup. Other than that, we could see prices continue to range in the next 3 or 5 candles, and a defeat of this level is required to end this downtrend for the short-term view. Now, if we focus on gold, especially on gold prices, you could see prices are literally ranging so much in the past 3 hours or 4 hours. You could see this candle, that candle, and that candle. There is a huge momentum on gold prices. Now, this momentum actually comes due to the fears, as I said, from the global recession. What should I do in the short-term view? Now, we looked at the long-term view. What should we do in the short-term view? Now, as a trader, I try to understand that what is the long-term view? Is it bullish or is it bearish? If it is bullish, I only try to find in the short-term setup bullish signals. That's it. I don't look at the bearish signals. Why? Because there is a higher chance that I might lose money from going short. Because if the long-term view or the 1-hour chart says it is long, I need to stay within this move with the short-term view. So this movement over here could indicate for what? Take profit from these levels. Whoever took a trade buy here could actually leave here and then pushing prices down. Okay. Now, if he left the trade and closed this trade, or let's say a lot of traders closed this trade, we could see prices continue to the downside. Now, does this mean that there is going to be a bearish pressure? No. We need to wait for confirmations. Always use your indicators to have confirmations. Now, the confirmations from the stochastic is what? Whenever prices go down to the oversold territory, always wait for it to retrace back to take a bullish setup. Now, I only take this trade if prices continue to stay above the moving average. If prices are between the moving averages, I wouldn't even look at the indicators, but rather wait for confirmation. If prices went back up, that's an entry. If prices continued to down, I would aim for the short-term view for the short-term momentum, let's say to this moving average. Okay. Now, this moving average, the first one, which is let's say the fastest one, is currently at the 2022. Okay. We could see prices retrace all the way back here and then re-enter to a bullish setup. Okay, and aim to $3-4. Always try to get $3-4 in the short-term view, especially when there is a very huge momentum. Okay, and then exit your trades. Okay, this is how you take as a scalping strategy. Now, why $3-4? $3-4 usually in slow, volatile markets, or let's say not as volatile as these days. Okay, we usually aim for $2 or $1 maximum. But however, this range actually increased. The average true range for gold actually is increasing because of the movement of gold. Literally moved within 1 week almost $100, which is, or even more. That means the latest range have increased even further. That's why we are aiming for $3 or even $3 to $4 maximum. But before it was $2 to $1. But now, since markets are moving really fast, I would rather use a really low, let's say, lot sizes or contract sizes instead of going, let's say, for if I'm usually taking, let's say, 0.1, I would go even lower a little bit, 0.05, for instance. If I'm using one lot, I would go to 0.5. I always take lower risk from that perspective. Because why? Because the more volatile the market, the more chances my stop loss is gonna hit, especially if there is no breather for my stop loss. So that's why I wouldn't take any trade unless I have risk management methodology in hand. So always use your stop loss, always use take profit levels, because the more you use stop loss and take profit levels, the more organized you're going to be in your trades. This is a psychological part. That's why we should always aim to have risk management in place before even taking a trade. Always use your indicators for entry signals. Okay, but also never use your guts, especially your guts for a trade. Why? Because the more you use your guts, it becomes illogical reasoning to enter any market. So always use whatever in hand that could help you. Never use based on just the movement alone itself. I know a lot of people use price action to trade. That's a different story, but still always use whatever in hand, whatever indicators you're using, and always use your risk management. Now, this tension could escalate for the next 2 weeks. So if oil prices continue to dominate and continue to surge higher, this could actually be bad for indices, bad for the financial market in general, because this would actually create a global recession and would create even further change in monetary policies now. So the latest monetary policy was to tackle inflation. Now, since inflation was the main theme at the start of 2022, I don't want to say it stopped, but rather people are more concerned with the tensions now. So the macroeconomic events does have its merits, its value, but still there is another thing that's actually weighing on the market. So keep following the news, keep looking at the political tension, but from a very short-term perspective. Don't go deep into politics to understand what's going on. Just understand that the more tensions happening, that means the more chances of gold going higher. Oil could go even higher depending on the ban. If the ban continues, or let's say if the ban was even for a long-term view, we could see oil even surge higher and higher. Also coming into play, Iran nuclear deal with the US. So also if the Iran-US relationship got better and we could see the supply of Iran coming into the market, we could see a bearish setup for oil. But still, until that happens, we could see prices continue to the upside. So the current favored item for items, let's say for traders, is currently the commodities in general, and less they are. I don't want to say they are more worried about indices, but rather they are going for other commodities, for the commodities products, because it's more shining at the moment. And usually traders, or let's say normal traders, or let's say new traders, they aim for any products that they are actually going higher and higher, because they don't understand just yet the concept of short selling, because you can benefit from short selling by aiming for prices to go lower and lower. And that's why you should always use risk management here. So with risk management, you can actually defeat this market. You can actually get money from this market, but you need to be smart. Always be smart in your trades. Okay. If you have any questions about this session, if you want any information, please contact us. Please like and subscribe to our channel. More to come from next week and also from the coming days with the help of other market analysts. Please stay in touch and keep up with the news. Thank you so much for your time, and hopefully we will see you next week.